institutional portfolios, they've been net sellers. Now, where they've been adding and why their portfolios have been growing or staying stable at bare minimum is there's a sale of the scattered strategies and rolling into a build-to-rent strategy. So we have seen that pick up over the last few years, independent of any new talk that we've had over the last 2 months related to industry updates and coming out of Washington. This was a trend that was already happening, and I think that's really critical to understand right now that build-to-rent has been a solution. It's been growing an institutional asset class very rapidly. We have seen both from the residential side, capital and credit come in, and then we also saw the multifamily space start to enter over the last period of time, meaning you owned 20,000 multifamily units. Historically, that was how you ran and operated and thought that was a growth platform for you. Now they've added build-to-rent as an acceptable asset to be able to add to their portfolio, and it really accelerated the growth of the industry that you had multifamily capital coming into the space, whereas before, again, 5 or 6 years ago, that was quite rare. So those are the dynamics that we've really seen shift a lot, and scattered being less popular strategy for a lot of reasons. Rent values from a residential home, as we saw post-21, were up in some markets 50% or greater. The rents, although have grown quite a bit, have not kept pace with it's very hard to pencil a $500,000 asset as a sort of scattered SFR strategy. So for a lot of reasons, we have seen the SFR space slow down and build-to-rent really accelerate.
Yeah, and part of that is BTR is adding supply, and President Trump, everybody else is all in agreement that we need more housing in the right places at the right kinds of rent and price levels. And BTR helps to meet a need that really exists in the marketplace. Andrew, I want to come back to you again. Find out from you what markets you think, geographically speaking, are the ones to look at, and in particular, what are your thoughts about the secondary market?
Yeah, it's pretty significant. I'm glad you asked about some of the secondary markets. I think the key for all of this, primary or secondary, is affordability, right? One of the reasons that a lot of these primary markets came up the curve, and even prior to COVID and some of the migration patterns, were because of the affordability and lifestyle, and the affordability piece, which everyone's focused on from the administration down to private capital. That's what's creating the challenges, and so you are seeing a population migration now to some of these secondary cities where folks can get that same quality of lifestyle, but at a more affordable absolute price.
That kind of dovetails with a lot of the research we're doing too, that finds that the absorption paces are challenged right now in a lot of markets. And chunk rent is a key. So if you can be, below, say, $2,800 a month, you're going to get a lot faster absorption than higher than that. And that's where the secondary markets really actually tend to shine.